All right, good morning. So as we usually do, we want to start with what happened in the overnight hours. And we're just looking for any insight, right? What was going on in the Asian market, which is already closed by now? What is going on right now over in Europe? It's 12:30, so it's around noon there. They've been having a real energy crisis. And then, of course, they've got central bankers, job numbers, unemployment, everything, same things that we do. Morning, Jonathan. So we want to, take an eye out for what was going on in the overnight, see if there's anything that may bleed through. Jackson Hole is kicking off today, but the Fed won't talk until tomorrow. There was a Bloomberg article that mentioned that rate and bond fund, like hedge funds and rate funds, are heavy short coming into this symposium at Jackson Hole. They're really looking for a hawkish Fed. And when you pile that much money, the put call ratio was like 7-1 at 10:30 yesterday morning. You start piling that much money on one side of the fence, if they get caught off sides, we're going to squeeze like a rocket ship explosion. This thing's heading to the freaking moon. So that'll be real interesting to see how that works, how that comes through. I'm pretty sure I have a link somewhere if anybody is interested in it. I keep a Bloomberg subscription because with a student ID, you can get it for like $5 a month or something like that. Totally worth it. Some of their articles are really good. Let me get this link. I'll put it in the chat. And that's exactly the kind of insight that you're not going to get from the charts, right? You want to be able to identify what's going on and where the risks are and how big of a move we might get should we catch everybody off sides like that. All right, found the article. So I'll put that in the live stream and I'll throw it into you guys at the Discord. So they're really looking for a hawkish Powell, although Powell seems to have a history of punting. And I've always called it like Operation Don't Rock the Boat. They want to come out and chip their teeth and talk, but they don't really want to say anything of substance. They don't want to rock the boat. So we'll see, right? And it seems like no matter what he says, the market takes him as dovish either way, right? It really almost doesn't matter what he says. The market hears dovishness. So, I guess we'll see, right? That's tomorrow. On the docket for today, 8:30, 10, 10:30, 11:30, and then 1 o'clock. It's all day today. And what we want to avoid, because the entire market right now is on the hurry up and wait wagon. You don't need to see that. What we want to look for is definitive moves, all right? Not the choppiness back and forth. It seemed like I spent a lot of my day yesterday trying to convince people that we weren't breaking out and running to the moon, or that we weren't breaking down and crashing and burning. It was just a slow, boring, choppy, nasty day. And sure, looking at it here after the candles are gone, it's not that bad. It's like, well, you could have taken the lows here and, you had the triple tops, you could have taken those. It wasn't that clean. in the intraday. And I'm not saying that we couldn't have traded yesterday, because I mean, there was opportunities there, but I was trading other things other than the futures, because this isn't what I'm interested in trading. And I think we're going to get the same thing today. It doesn't have to. If we get something that really galvanizes the market and we do break that level, then sure, game on. But I don't see it. Now, throughout the week, this thing has been passing back and forth between 60-40 to 40-60, 60-40 to 40-60, just back and forth, back and forth, back and forth. And I think that we're so close to the event now that there's not going to be any real winner one way or the other. It's been just back and forth, back and forth. I don't stare at this thing all day long, but I certainly look at it a few times through the day just to see if we're really rebalancing on one direction or another. And so far, no. I mean, not really, no. Just that back and forth process. But today, with this news that's coming out, we have the capacity to really shock and awe, and that could get us back inside the weekly expected move, have us moving towards the high of that CPI value. And that was when they priced, they unwound 25 basis points that they had and priced into the market at that point. So, right now we're back to the 60-40. Well, we're back to the 40-60. 40% believe it's going to be a 50% rate hike, 50 basis point rate hike, and 60% believes it's going to be a 75. Well, if they go to unwind that again, we are right at the same CPI low level that we were when they went from 75 to 50. So if they go from 75 to 50 today, we're likely to go from 41.33 back up to 42.33. And so that's definitely what you're going to want to keep your eye on, is getting anybody caught off sides today by that news. And without the news, without something to cause us to rock and roll, then the expectation is we're just going to hold the range today. It's a hurry up and wait, right? It's a catalyst waiting to happen. And there's just no expectation that we're going to do anything else, not until tomorrow. Wow. Not until Friday. Man, tomorrow's not Friday. Oh, it's been a week. Already it's been a week. So for today, like we usually do, we have three things that the market could do. Hold the range. Breakout of yesterday to the upside, breakout to yesterday to the downside. We can see how little the participation is this morning, and I think that's just going to get worse as we go through the week. We are underneath the daily pivot, and you could call it hit. I mean, it's kind of a little bit of a two-way street. Some people give it the nod if we get close. Others won't call it hit until we actually cross through the other side of it. There is an argument to be made about hitting pivot points in the Globex. Oftentimes, a technical analyst won't consider something like that to be tagged until it's tagged in the intraday. If I was running this strategy called the MDP, the missed daily pivot, I would consider this still having been missed. But if we're just drawing a line in the sand and focusing on a pivot without the MDP, then I'd say we haven't hit it yet. We haven't crossed through it. Right now, the base case is our own price action here in the Globex. Globex high to Globex low. If you was to look to expand beyond that and still have the base case range argument, then I would focus on all of yesterday from the highest point to our Globex high, and then from our Globex high to the Globex low. It's only 2 zones instead of the 3 that we normally would focus on, but it's a muted zone, right? It's a compressed range. If you wanted to kind of maybe narrow that up a little bit, you could focus on the Globex open to Globex low, the Globex open to that first. I would flip the chart to like a 5-minute and do the 5-minute high. Well, I guess the 5 and the 15 were the same one. Perfect. So 5-minute high, and then the third zone would be from that 5-minute high to the high of yesterday. That would give you the 3 quadrants. Although, you know, it's so narrow that there's really no reason necessarily that you would need 3 quadrants. But yeah, I mean, there you go. It would certainly do it. Now, on a day like this, when you're dealing with the compressed range, there are indicators that do better in a range than others, right? Like say a stochastics would it's kind of designed for this style of trading. Maybe an RSI if you drop it down to like a 10 or an 8. What I personally like to use are the ticks. There was a day trader who won a lot of trading competitions using stochastics intraday in a ranged market. Can't remember his name. And of course, we're talking like in the early to mid 2000s, I believe. Been a while. So if I was going to trade in this range, which I wouldn't necessarily be interested in doing, tick extremes kind of help time that reversal, getting the validation that we're really going to hold the line. I'd probably approach it from that point of view or from that direction. But yeah, stochastics. If you were to go to stockcharts.com and kind of poke around over there, they've got that chart school. Just kind of line up against multi-collinearity, make sure you're not doubling it or even tripling indicators that are all looking at the same thing. There's no reason to have, 3 indicators looking at price and not have at least one indicator looking at volume and volatility. All right, so kind of spread it out a little bit if you're going to try to do that. And, you know, I have the expectation that we're very likely going to just hold the line. Now I can see price coming back up here again to flirt with that daily pivot point. When we're above the daily pivot on the day, we're bullish on the day. And when we're below it, we're bearish. You could lean into the market breadth, the intraday tells. Yesterday, for an example, this weighted AD was just absolutely perfect. It told a very clear story that there was nothing to trade, right? I didn't even bother messing with the futures through that chop. I had other things that I could lean into. And one thing that I found that was interesting is we didn't get a new low yesterday. This is a kind of a broader, it's a 15-minute tick, right? And I added a moving average from a higher time frame. I believe that's a 30-minute moving average. We're on a 15-minute chart. And when I start to zoom out a little bit, you can see how we had begun trending down from like that Friday where we were tagging levels, then everything started to break. And then we've been just trending down every day. We set that low about noon, and that was it. And we started the crossover. This is the first crossover since last Tuesday, right? We're getting up to that zero line. So, you know, there is a slight edge to a bullish argument. And I mean, we're talking a slight edge here, right? We're not talking about like run it back to 43. Nah, probably not yet. Down in the bottom here, I got the SPX, and up here we've got the ticks with that moving average that I was just talking about. And you can see where everything started to break down and we had a divergence, right? We had the ticks that were no longer setting new highs and instead started setting lower highs and lower lows. And yet we had the SPX, or yeah, the SPX here, setting another high, right? So we had divergence. The ticks told the story, and it took another couple of days before S&P rolled over and started moving in the right direction. And now what we want to focus on is, oh, I don't have my drawing tool. Could have swore I turned that thing on earlier. Sometime today. There it is. So now we want to focus on this extreme move back up and the divergence that it's presenting, since we are not yet seeing that move in the SPX. Now the SPX and the ticks are both daytime things, right? We don't have to worry like, well, it's the Globex and the futures are moving. And now this divergence was from yesterday during the regular trading hours when we started to get that move back up and was not seeing it reflected in price action. Now I've shared these grids in the Discord where I put all the Thinkorswim stuff. You won't find it on the 15-minute time frame. You'll actually have to, you know, take this chart, which I normally leave at a 2-minute, open it up and set it to a 15. But I don't think that's going to break your heart to be able to have to turn the chart to a 15-minute. Otherwise, these grids, just the way I have this built, is in the Discord. Now, I have people ask for this all the time. And sure, I can hit the button right this minute and give you a copy of it. But if I did, the next time you see something on my chart, you're going to say, oh, can I have that? You know how much stuff that I have that you have not seen that you probably would want if you knew that it existed? A lot. And if you're only going to get it if I give it to you, you may not see all the good stuff for a long time. So what you would want to do is go get into the Discord where all the Thinkorswim stuff is at. So come down here to the Traders Resource Zone, go to Custom Scripts, scroll up to the Thinkorswim workbook. Take this and maybe just throw it over here. Go into that workbook, take a look around. You can search for things on Discord in the upper right corner. So once you're in that workbook, go to the upper right, type in market breadth, or start looking for charts. And you will find everything that you're looking for. If you look around and you still can't find it, by all means, come back into the Bullish Bears Discord, tell me you can't find it, and I'll help you out. Russia is thought to be considering long-term oil discounts in response to price cap push. Well, that just moved the market. Talking about 30% discount to Asian buyers may be a sign that Russia is attempting to derail discussions by the Group of Seven about carrying out an exception for pending European Union sanction on Russian oil. You know, those sanctions only last so far before a market or a country or a company or an individual finds a workaround, right? There's always a way. Where there's a will, there's a way. All right, the key outside markets today saw the NYMEX crude oil prices higher and trading was going to be, like around 94.5. Report said Saudi Arabia may be looking to cut back on crude oil production, which would mess with supply levels. US dollar index was firmer in the trading session yesterday. See, I didn't think that report was quite right. That don't look too firm to me. We had that massive liquidation drop. All right, now the idea here with the dollar, it's very likely responding to the transactions that was seen and that Bloomberg was talking about, right? All those rate funds and hedge funds that are positioning short, anticipating that that hawkish Powell Friday. So I don't think we're done with these big moves in the dollar. Really just, I've been keeping an eye on it, but the dollar has not been, much help in the last few days. These big parabolic moves, we're not seeing them really reflected in the rest of the marketplace. And we're certainly not seeing it matched in the VIX. See, check it out. That oil, that news hit on Finance Juice. And there's our pop. Getting a pop in the market and you're getting a confirming, validating move within the VIX. Now, that doesn't mean that it's 100% guaranteed, but the idea of seeing it matched in the VIX kind of gives you a little more assurance that this isn't going to be just a pop and drop, right? Just be cautious. We're coming up into that 41.41. And when we get there, we could tag and drop out after that because we would have reached our level. Oh, we broke parity yesterday in the euro dollar. Back below 1. All right, so the base argument is still the same here. Our expectation is that we're going to hold the line. We're going to stay inside of yesterday's price action, including the zones that we had already discussed. Going to continue to lean on that as the base case argument. Should we get bullish, however, we do have our ADR levels. So the ADR half would be getting us up to the high of yesterday, 41.60. A full ADR would be 41.92, and that would get us up into the 38.2 retrace. For a bearish move, should we break the COG level to the downside here? COG is at 41.11. We've got our near-term support at 4100, ADR at 40.96. The last line of defense at 40.80, and then the full ADR at 40.64. A couple of things to mention on this last line of defense. I mentioned the other day how we're very close to getting a lower low. And that if we had got a lower low, it would negate this trend that we were looking at off of the June bottom. That trend is dead. It's done. So, you know, if we're only using trend analysis, I'm sorry, Ingrid, the restream has been such a turd lately, and we're still waiting on Lucian to figure out if we're going to be using like an OBS studio or something like that. And we've been just kind of limping by as much as we can. Usually the choppiness stays low if I don't go over to a website. Chrome keeps crashing when I try to use it, so we're just trying to get by. Hopefully he gets us lined up with OBS Studio soon. So with technical analysis, if we were running just the swings, higher highs, higher lows, higher highs, higher lows, then we had to keep the higher low. If we ended up with a lower low, then it would negate the whole trend. The trend would be dead. And it's dead. We did not rally and instead dropped below a key level, and that has killed the whole thing. So the trend is done. The thing about a dead trend is that it can come back again. Right? So you can have a trend that dies, and then later on, from its current location, it can break highs and begin running again. And we wouldn't say the trend resumed. We would say that that a new trend has been born, right? So the old trend is dead. If you didn't want to run the swing highs and the swing lows and do it that way, Another way that you could check to see if a trend is still alive is by using Fibonacci's. Now, a lot of people don't quite grasp where to use their Fibonacci's at. And then it becomes like, well, am I putting it in the right spot? Should I put it somewhere else? Is this fair? Should I use the wick or not? And it confuses people. But 786 is my line in the sand. If we break and close below 786, then the trend is dead. And that's exactly what we have, right? So that uptrend is no longer alive. Now, Powell may start a new trend Friday. Even that OPEC news and the news from Russia that just came out with the on finance juice, I don't think that's going to have enough go to take us back to 4,300 and then up through. So we're going to need Jackson Hole. Yeah, I use OBS Studio when it's my accounts. The main issue right now is I'm on the Bullish Bears account, see, and I access that through Restream. If I was to access it through OBS Studio, they would have to give me all the credentials so that I could program OBS Studio to connect to the Bullish Bears account. And therein lies the rub. They don't want to give out the credentials, and I don't blame them, but right. See, I can use Restream without having any of the credentials. All I got to do is log into Restream. They already have it programmed. Does OBS Studio have an online version? Because that would solve the problem. I could just log into their OBS Studio online and use it, but I've never used an OBS online. I really want a solution to this problem. I really do. I want my morning briefings to function correctly again. It's driving me crazy that we're getting all this chop and nastiness. All right, so August 10, we had the CPI report and the market unwound 25 basis points, and we exploded from August 8 or August 10 all the way up. And then they started to unwind everything, and we're right back down to that same level. Right? They started pricing back in that 25 basis points. We're right back to where we were, and that's where we're holding. Like right now, this is like a train on the railroad tracks. We know exactly where we're going, and we're there. We're sitting right at the point of control. We're almost in the middle of the box. We've got time by price starting to spread out again. Finally, remember it's been really, really muted, really narrow. So it's starting to equalize and clean up a little bit. There is huge shallow areas above and below this week's levels. So the high of Monday and the low of, say, last night or even this morning, that's our range. Really, really, really tight range. If we break below, there's nothing to catch us. It's going to be a fast fall. And if we break back up, it should be a quick run to like 42.20 plus before we start seeing any resistance. I've got 42.13 marked because on the day of the CPI report, that was the high of that day. And I marked that level. So nice shallow areas. If we break on either side, it should be a fast run. We also had a J hook with not as low of a level as I would like to have seen, but a J hook on a lower gamma. There's really nothing to carry forward here. There is that untouched point of control way up at 42.30, but we are a long ways from that. And There's no expectation that we're going to get there today. All right. Getting a little bit of fire out of Amazon this morning. We got an inside day breakout in Amazon, or excuse me, in Tesla. Now it needs to keep it. And remember, we got that stock split tomorrow. So we're going to want to see Tesla hold above yesterday's high now that it's already broke out. If not, as we come into the open, if it's faded back down some, we definitely don't want to see it get below that low set in the Globex. So if it breaks back inside, we want to see it in this range here. And then what we'll be focused on is that high. So as we come into the open, say we're down in this area, we're going to be looking to see that big break to the upside. That would be the inside day breakout again. And then challenge that Globex high. Be very careful, because if we do open this way and we come up and challenge this high, we'll have our inside day breakout in the RTH, but that'll be a rejection zone. And if the whole of the market is going to stay sideways waiting for Jackson Hole, then that'll be the rejection point. So it'll be one of those fake breakouts. If we get above 900, then we're going to be targeting 912 and then 930. I had a level above that too. 944. I don't see 944 on the day, but and it does have a market maker move today too. So the current ADR is 4%. We had a market maker move attached to that with another 2.5%. It's definitely got the capacity to make a move today. Now, technically speaking, I don't think it's going to make, a 6% move, but it's on the deck. Watch for that 200 period daily moving average. It's right at 900. Apple's making a run towards an inside day breakout. So we got a red to green forming. Apple's got this gap that needs to be fixed. So same setup with Apple. With this red to green, one of our metrics are that we get outside of yesterday's price action. So I would start with that. Watch for a head fake or a failure and a break at 160. I'd call it 170. And then the gap close would be 171. Apple's another one of those that has the legs to really make a move. Now, generally speaking, with my red to green plays, I like them all the way above that previous level. Or what I usually say is I like them above the open. You know, like if it was a red day, this one, this is a perfect example of a red to green. If we had closed down here and in the pre-market, we rally up and we get above where we had opened the day before, but we're not yet all the way broke out. I love that. That's perfect. Because then when we come into the RTH, we can fade back, bounce off the open, get our inside day breakout, and then get our run. But this setup that we have down here is different than that, right? Because our open and our close are so close together and they're both in that lower portion. So now we're going to be looking for an entire breakout of that candle. And this is not just an inside day, it's an IX10 at this point. That's the zone that we want to get out of. And then we'll focus on the gap close at 172. There's no reason for this bullishness, right? Apple and Tesla aren't making moves based on that Russia oil news. Apple's up 0.63% this morning in the pre-market. It's got an ADR of 1.8 and it has a market maker move of 1.3. The options volume traded on Apple yesterday was really light. So you might want to be focusing on that options volume as we come into that open. I would be looking for a head fake though. What we're basically getting here is a 20 period moving average bounce, and we're struggling with the 10 period crossover. Now there's a signal called the surge signal, and it's when price crosses the 410 and then the 4 gets above the 10, and all of that happens above the 20. So we're starting a surge signal after a pullback. All right, AVGO had a nice move yesterday after that hard liquidation break on the 22nd, or on after the 19th. We had that huge drop down. Nice little recovery started yesterday. Looks like we're trying to follow through with that. What you really want to focus on here is that there's no volume here. This isn't flow, right? This was like a single print, a pre-negotiated price. So I'd be watching this for some real volume to come in, and I would not trust that change in percent that we're looking at this morning, not on that one. Now PayPal, it's got a little bit. Watch for 94 in the pre-market. If we can get above 94, we want to focus on that 95.5. We do got that gap fill here, just like we have it everywhere else. So if we can get above 95, call it 95.25, then the target will be 96.5. So the range is there. Just again, watch for that fake out. Right? The concern is that, you know, we make that hard push to the upside. Everybody starts jumping in, thinking it's the one, and then they run it down on our heads again. And Facebook is the last one that's moved more than 0.5% this morning in the pre-market. It's way lower than all of the other ones. On the weekly, we've got this beautiful bear flag play, and I would be looking for bear flag failure, right? The failure of a bear flag is that we get out of this channel where we've built our base. So a nice run up, pull back with the Busby, and then a continuation. And the idea is to get back to reciprocation, right back to that 300 level. Obviously, that's a longer term swing trade. I can't stress enough, wait for Jackson Hole. Let the Fed come out and give some real guidance. Otherwise, keep your trades really short duration, 1 day, 2 day, midday trades, right? Get in, get out, paper hands. As we come into September, we're really looking for a significant rally in the overall broader marketplace. We just got to get through the end of this summer doldrums, the lowered volume. Jackson Hole. Jackson's going to line us up for late September Fed meeting. So just hold the line, make it till Friday, let Powell do his thing, and we'll go from there. Keep in mind, those rate funds and hedge funds are heavily shorting the market right now. So if we catch them off sides, if we start to rip to the upside and they start to get squeezed, it's going to be an epic squeeze. That's what I got for you guys. Be careful, be safe. I will be in to stream in the later part of the day in the Discord, probably around 1 o'clock or so. If that time frame changes, I'll let you know as soon as I know. But that'll be the goal, right? To be in around 1 o'clock.